Millions of Indians living in the US send money back home every single month. But if you use your default checking account, a noticeable chunk of that money is quietly slipping away before it ever reaches India. The most obvious penalty is the upfront wire transfer fee. Banks usually charge a flat $25 to $45 just to initiate an international transfer. This chart breaks down a standard $1,000 transfer. The first bar shows the real mid-market exchange rate, let's say 84 rupees to the dollar. The second bar shows what traditional banks do. They take their $35 flat fee, and then they drop that rate down to around 80 or 81 rupees. They keep the difference. This is the exchange margin spread. Look at the bottom line of that second bar. On a single $1,000 transfer, that margin spread and fee combined drain away nearly 4,000 rupees. Over a year of monthly transfers, you are losing up to 48,000 rupees. Escaping that traditional bank wire fee is easy in 2026. The real challenge is navigating the massive landscape of fintech apps offering to move your money instead. Choosing the right app comes down to a single metric: balancing how much of the real exchange rate you want to keep against how fast you need the money to arrive. Sticking with a standard US bank means paying a steep financial premium purely for the illusion of digital convenience. We can plot the major fintech options on this chart to see exactly how they perform. The vertical axis measures transfer speed, from days to minutes. The horizontal axis measures the final rupee payout, from low to high. If you are an optimizer, someone sending large amounts regularly who wants to maximize the final payout, your primary tool is Wise. Wise plots firmly in the bottom right quadrant. It delivers the highest total payout, but at a slower speed. Their model is transparent. They charge a small percentage-based fee, typically 0.5% to 1% of the transfer, and secure the exact mid-market exchange rate you see on Google. There is zero hidden markup on the currency itself. The concession here is time. Funds sent through Wise usually require 1 to 2 business days to fully settle into an Indian bank account. If you are an urgent sender dealing with an emergency, waiting 2 days isn't an option. For immediate delivery, the standard is Remitly. Remitly sits in the top middle of our chart. It maximizes speed while maintaining a moderate payout. Their Express tier is built specifically to push funds through rapidly, guaranteeing delivery to an Indian account within minutes to a few hours. To get that speed, you pay a built-in convenience tax. Remitly takes a slightly wider exchange rate margin, offering a rate slightly below the true mid-market level. Maximizing your financial return requires a couple days of patience. Demanding instantaneous delivery means accepting a slightly smaller final deposit. There are 2 other distinct scenarios to consider: sending infrequent small gifts or sending money to older relatives who do not use digital banking. Looking back at our chart, Google Pay lands in the top right quadrant. It offers a near-instant, low-friction solution for casual transfers, but it comes with a strict cap. Google Pay currently limits international transfers to $2,999 per transaction. If you are already using the app daily, it is highly convenient for sending smaller amounts quickly. But that transaction limit makes it useless for moving larger sums like investments or real estate payments. Then there is the unbanked sender profile. For decades, the default answer for this was Western Union's vast physical network. On a digital matrix, Western Union falls in the bottom left quadrant. It offers slow bank transfers and the lowest total payout of the group. They compound a flat $5 to $15 transfer fee with a poor exchange spread that mirrors traditional banks, making their digital service highly inefficient. The single enduring reason to use Western Union is physical cash pickup. If your recipient in India cannot access a digital bank account, they can still walk into an agent location and collect paper bills. Otherwise, legacy systems like Western Union mathematically drain your funds. They should only be used when physical cash liquidity is mandatory. Selecting the right platform is the baseline. How you execute the transfer determines your final cost. Every transfer carries a base fee, so frequency matters. Sending $2,000 once is always cheaper than sending $1,000 twice. Consolidate your transfers whenever possible. The rupee fluctuates daily. Using third-party tools like Currency to track the market allows you to time your transfers when the dollar is strong, which can net you an extra 1,000 rupees on a single transfer. Both Wise and Remitly allow you to set automated rate alerts. You punch in your target exchange rate, and the app pings you exactly when the market hits it, entirely removing the human emotion from currency timing. This flowchart simplifies the final decision. Everything stems from asking yourself one question: what is your primary constraint today? If your constraint is securing the absolute highest return on a standard transfer, route your money through Wise. If your constraint is time and you need the funds to land within hours, use Remitly. If you are sending a quick gift under $500 to someone already in your contacts, use Google Pay. And if the recipient strictly requires physical paper money, route it through Western Union. By matching your need to the correct platform, you stop leaking money to hidden margins and keep those thousands of rupees in your own accounts. Escaping your traditional bank's wire system eliminates the hidden tax on your remittance. You just have to decide whether you want to optimize for the absolute best rate or pay a small premium for speed.